The markets are closing out the week on a high note. We got crypto pumping. We got TradFi still trading around all-time highs. We're going to be discussing that and much more today on Money Never Sleeps. Thanks for joining us today. As we get going, hit that like, subscribe to the channel, and remember that nothing that we say is financial advice. So please do your own research for making any buys or sells. Kev, it is OpEx day. The TradFi markets are 1 hour away from the weekly close. Look to have another positive week here. We see, some tech companies bouncing back today. We see some financial institutions having a nice day. Coinbase, Robinhood, we'll talk about them in a second. What has your eye as we close out another week here in May?
Yeah, I mean, it seems like all the money was made right after the CPI data released, right? The market's fairly flat for the past 2 days since everyone got the prices to the levels they wanted, and the only thing that's really moving significantly is GameStop to the downside. So interesting stuff around there too. Someone finally realized that Roaring Kitty was posting these tweets every like 15 minutes or so. So there's a good chance that it's just automated a lot of this stuff, and there's just a shit ton of memes. It's not like he's creating them and then he's posting them like one by one. It's like these were kind of preset to come out. So it's so weird.
In about 3 years, we're going to get another Netflix documentary around this Roaring Kitty situation over the last week and who was actually behind it and what the motivation was and all that stuff.
Yeah, I don't think it's him at all. But that's just my best guess. And all I'm full of is best guesses and shit, apparently, because the market keeps going up. But yeah, so I'm pretty much just watching to see how this plays out next week. I think next week's gonna give us a lot more information because there are a lot of bearish divergences that are out there. But again, the market just hasn't been reacting whatsoever. So we just kind of have to work day by day with what we got and just not try and get ahead of ourselves too much. It's easier said than done, but it just seems like a lot of people turned max bullish as soon as that CPI print came out, right? Everyone's hoping for that 25 points coming down.
Yeah, I think it was, seeing that number on Wednesday, I think I mentioned it. Like I had someone asking me like what my thoughts were on the market, like in a Discord that I'm in. I was like, well, CPI came in about where it was expected, and we have no real major data for the next like week and a half, 2 weeks. So I think short term, it's probably a good time, and it's played out that way. We're seeing, the NASDAQ, the Dow, the S&P all on their fourth straight winning week. It has been a really good bounce back there. And I'm looking at it, and they're still, not in the overbought territory yet. So I think there's still room to the upside here over the next week or two, maybe longer. It does seem, though, that we can talk about GameStop if we want. The retail liquidity just isn't there, right? Like this was a violent move to the upside and a equally violent move to the downside. And, the volume seemed to be there for the first day of it, and then it just dried up immediately. There wasn't that continued buy pressure. There were people who had either been holding it recently, who were manipulating it, or who, bought the top and wanted to get the hell out. I just still don't see, that's one of those stocks that retail does impact. Now, there are a lot of the other, major ones out there that aren't impacted as much by retail investors, and they'll continue to be fine. But let's pull up the chart for GameStop. Let's look at Robinhood as well, because that is on a tear today, up almost 12%. It's been upgraded to a buy by quite a few, financial advising companies, and kind of pointing to the fact that they have cut their costs. They are operating in a profit, and more people, I think, as that's something else with AI is more and more people are going to be able to, are going to feel more confident managing their money when they have these greater resources. So I think that's playing into it a little bit, but mainly the fact that this is where retail is transacting, is Robinhood, right? Like it's
Yeah,
easy to open an account. Opening an investing account on most other sites through most other companies is like a
sucks.
pain in the ass. It's so annoying. But with Robinhood, it's easy. You download the app, it takes like 5 minutes. Whereas you try to go on, to any of these other institutions, and it is just it's a 30-minute process, and it's a pain in the ass. So they've done a good job of making it easy. GameStop, I mean, this is just a ridiculous daily chart for the last week.
Yeah, and that's why I don't believe it's Roaring Kitty too, because he's not a stupid guy, right? I don't think he's a stupid guy by any means. I think he's pretty smart. He saw that how many shorts were floating back in 2020, 2021, and he kind of made that bet, just going out there and saying, like, there's a good chance we could get a short squeeze. Him coming out and saying this on Monday, but understanding that we're in a very different place than we were in 2021, where there was a lot of stimulus going around, and retail did drive a lot of it to at least initiate some of the beginnings of this. And then obviously, as people that trade started to unwind, you started to see a lot of institutions take profit in that GameStop trade. It seems really stupid that he do it at the beginning of the week and not closer to today. I think this would have popped off significantly if, say, Wednesday night or even last night, even if those tweets started coming out, right? This would have been not enough time for people to make a move and keep this from absolutely blowing up some people that were short GameStop ahead of today. But it came out and there was plenty of money and it was a bit of like a liquidity grab. So it's very interesting to see the timing of that. It didn't make sense to me. The short positions and how many people were buying calls last Friday does make sense, but this is just 100% like you said. There wasn't enough power in retail in order to sustain this. Not enough people who were holding it, and because they were holding it, they were able to keep the price from going down further. As soon as people got in, it looks like a ton of people who had a lot more shares got right out. And I also saw today that they're offering 45,000 new shares or something like that for GameStop, I believe.
No,
Um, pretty
45 million shares. They can
45
sell
million.
45 million shares. Yeah.
Yeah, so this is the same thing that AMC also did a few years back. This probably going to kill the momentum of this move. So not surprised, but it just seems like retail got fleeced on this one and they just aren't as strong as they were in 2021, right? Those stimulus checks did make a difference and people still had their jobs or they were able to find jobs easily post pandemic. Just now, not so much.
All right. I did see a new article that came across, a new headline around the ETH ETF app
I did see that too.
rejection. So that's a potential headwind right there for crypto. Anything else we can pivot to that. Uh, any final thoughts though in TradFi for today before we move over to the crypto side of things?
Yeah, obviously this is Robinhood taking. I just wanted to show up because we talked about it real quick, but I just want to go back to the S&P because this is the one that I've been watching like crazy. When I say there's bearish divergences, I mean there's a ton of bearish divergences, right? You could say a little bit of a broadening wedge. If you look at this going out here, you got a bit of a double top scenario almost, especially since we're finding some resistance now at that 5,300. We're getting a bit of a sell off since we hit that high of what was it, 53.8 or something like that, 53.10, my bad, or no, 53.25. So we pulled back a little bit, nothing too crazy. It's also end of the week, so I'm not expecting much price action unless something were to happen over the weekend. But the volume has been decreasing as the price been pushing up above the 50 moving average. Like I said, there was a lot of money coming into this OpEx, and a lot of people are going to be profitable. So I'm not surprised by any of that. It's the same thing that we're seeing here, though, too. Volumes have been dropping off, but the price has been pushing up. You don't see it here, but you can check the volumes on, on CNN or any of those other trading platforms. Even what was it? Apple stocks has it, but it's very similar to a double top. It's just a little bit of a higher high, and that definitely puts people in the money for OpEx. The funny thing is, though, when we look at something like the Russell, we talked about this the other day, still nowhere near at all. And I believe that the Russell 3000, which has a couple more companies, 1,000 more companies than the Russell 2000, 41% of those
Just
that
a couple
reported
more.
earnings, just a couple more. I'm sorry, I got a mush brain from looking at all these numbers all the time. These lines, kill myself looking at this. But if the Russell, 41% of the Russell 3000, which isn't this one, had negative earnings for Q1. So that's something else to think about too, right? And that's why I think that we're pretty much just and again, equity markets are very the economy is not the stock market one bit, and the stock market is not the economy at all. But you see stuff like that, and it's just like well, okay, if we were really doing well, then why aren't these businesses that, rely on the consumer not doing necessarily as well? It's a lot of money behind some of the big tech companies and stuff like that that don't come from the consumer itself. Last thing I do want to show is that VIX trade, right? Going into this, people were buying short volatility under $12 for the VIX under 12. And look, we're probably going to get that today before the close. So definitely people were making money on this. You could see a VIX close below 12. They're in the money at that point. And that was pretty much all the way down. People were just short volatility going into this OpEx, and they're making a lot of money off of it. Now, other side of that, look at something like the SVIXY, which is the product that I'm in and I'm trying to short. This thing keeps going up, but the volume has dropped off significantly. That's bearish divergence, and it is on the stochastic RSI 100 and 100. Now, if we look over at something like the UVIX, which is long the VIX, it's at $6.28. And a lot of people think that volatility can stay like this for a period of time, and it can, right? It absolutely can. I mean, if we look at the VIX real quick too, look already down 1202. It's going to be under there fairly soon. Someone pointed this out that the VIX spikes every 6 months. We got one in March, roughly about 6-7 months later, got one in October. Add 6 months from that, that puts us about April, 6-7 months or so, April. So a lot of people are expecting us to have a pretty good pop, maybe, I don't know, October, November, right around the election, which would be interesting to see if that's also the case. But why I'm bringing this up here is that this is getting very dangerously low, and we're getting very close to this apex right now. Maybe they can sustain holding it off if there's enough money that pushes the equity markets up. We know that there's a good chance that could happen. It seems like that's been going on for some time now. And again, this is a massive wedge from how high the highest to where we currently are. This apex, this is spanning from 2020, January 2020, all the way to obviously the 24th of June. Or not 24th of June, June 2024. So that's about over 4 years there. And every time we get to those apexes, we have a massive pump to the upside. Even in the smaller ones within these bigger ones, we just generally do have a really big pump. This right here, post-op, the apex of this shot straight up. And that would have been Volmageddon. Same thing here in 2020. That's obviously the pandemic panic sell. I'm not saying something's going to happen, but I do think that the trade is so lopsided, so offside, that there's a good chance that we could see something that just drastically brings this market, some fear in the market. And when I'm saying that the volatility is going to pop, I'm not saying the S&P is going to go down to 3,200 or anything like that. I'm saying that there's a good chance that we could have like maybe 2 or 3 days where the VIX shoots straight up because the S&P drops like 100 points one day, and the next day it's another 100 or 80 points or so. And just a lot of volatility that causes some selling in a short period of time that increases the volume to on the S&P for sell volume to increase significantly to the point where the VIX actually kind of takes a pop. And that would absolutely wreck a lot of those people who are shorting volatility, and help out a lot of people who are definitely on the opposite side of the trade, which we've always talked about are the market makers and clearinghouses. So something that I think is more dangerous now that we have OpEx, it's kind of clear that nothing's going to happen today. Now that it's out of the way, people have kind of made their money. Something just to keep kind of watch as we head into June.
All right, let's get into crypto as we wrap up the day. We have Bitcoin closing a very strong week. It is not far off from all-time highs, back to 66.7, almost touched 68 this week. ETH back over 3K. Solana having a strong day, kind of leading the charge right now, back to 167. Once again, not too far off from the 200, the high that we saw earlier this year of just over 200. So let's start at Bitcoin. Dominance is, just under 56 right now. Where do you see, when we look at this chart, we got all sorts of stuff going on. I think, this summer could be a lot more interesting than previous ones for crypto. The halving is behind us. The election is in front of us. Crypto has been a hot topic there. We've seen more and more large institutions, pension funds that are holding the Bitcoin ETF. It feels like our buddy Uncle Larry has created quite the wall around 60K. I know you still believe it could go below that number. I'm not sure. I mean, at this point, I don't know what to believe, Kevin.
I totally understand that. I completely agree with you, right? And I think I've taken a pretty logical approach to this from a technical analysis perspective. I may have underestimated some factors when it comes to how illogical markets can definitely be, right? And things are working out pretty well for us in 2023 when we were saying, okay, this is where support, this is where resistance is. We kind of knew that we had an oddball out there, which we'll talk about in a second, by the name of Tether, that was causing a lot of problems in the crypto market. Low volume pumps shooting straight up a few $1,000s within a given day when it probably should have jumped. We're seeing somewhat similar now, but it seems like Tether has been kind of quiet recently. We'll also pull up some news that we found out there in a second. But when I look at Bitcoin right here, or in this pattern, right, I do think that we can get under to 60,000. I think that's a wall that we can breach. We did it back here in May, early May, and I think there's a good chance that we could come down, and it's going to line up with this 50 moving average right here, right? I think this parallel channel and this 15 moving average will kind of meet. And if I'm just looking at this and being an Elliott wave theory asshole analyst, say, this is a 5-wave move to the downside, say right like this. Yep, because it doesn't come higher than that. You can say that's 5 waves right there. Let me just see if I can make this a little bigger and colorful. And let's make that yellow. I mean, I see 5 waves there, which means that we have an ABC corrective pattern, which we kind of have right here, right after it. And I know this is kind of boring just to see, but it's just kind of looking at where the markets are turning. Finding resistance right here on this top parallel line, this parallel channel. Volumes are dropping. We're at 194 on the stochastic RSI on the daily. Doesn't mean that it won't break out of this at some point. Maybe we have to come and get another test down here. I think it's very possible that there is a bit of a liquidity grab that we could get. It really depends on a little bit of what could happen if that does happen, though, right? Maybe Bitcoin coming down, but alts don't necessarily come down. Maybe it's a bit of a circulation where money from Bitcoin goes into alts, and that kind of brings dominance down just enough where alts can kind of have one little less ride. I mean, we see dominance kind of coming down today, even despite Bitcoin going up. And you're seeing some of these alts that have a pretty good chance. But if I'm looking at this, what I would expect, I'd expect another 5 waves down with, A, B, or 1, 2, 3, 4, 5, something like that. Get us to the 200 EMA. It's also the bottom of this parallel channel. And then Bitcoin can decide whether it wants to break out to the upside and go to new highs, or if it wants to roll over. And this has just been distribution 100%. Key levels to watch, 60,000. That's going to be the important one. But I also think that right now where we are is a pretty good one to watch. Obviously, we wicked up to this and we got rejected. We got to see where this starts to close. Starts closing above it, then we have a bit of an extended wave here, and then we're going to have to readjust things. But again, this is just something that we're going to have to take day by day, looking at the daily close. I'm not getting too caught up in this. Obviously, CPI sent this thing up $4,629 in one day. Obviously, a huge liquidity pump. Can't necessarily account for stuff like that. You can, but you also can't at this point. You just kind of have to assume that anything can happen. Let's see this. Well, Bitcoin dominance. Obviously, it's still fairly high. That's the other thing, but it looks like it's pretty topped out here on the stochastic RSI and the daily. If we look at the weekly, just see how that's taking a look. Weekly looks like there's plenty of room for Bitcoin dominance to continue rising up here. I think that we're seeing the volume drop off significantly, which doesn't necessarily matter. Maybe that's just how many people are absolutely getting into Bitcoin. I think that there is room for us to go to that overbought territory, and that could bring us above the 57. I saw Benjamin Cohen, obviously into the cryptoverse, he was talking about how without stable coins, Bitcoin dominance is north of 60%. So there you go. That's going to be really interesting to watch. Let's look at ETH real quick because that's doing pretty well today. The ETH ETF, I know you brought it up earlier. There is a good chance that it's probably going to it's going to get denied, right? Did it get denied already, or is it?
It's sounding like it's going to.
Yeah,
This is
a lot of people.
ETH has been one where I've been struggling with if I want to lighten my position in ETH because it just Solana is just faster and cheaper to transact on, and it feels like this. I got a bunch of it at a good price. I'm just like, is this 20K upside that people call for actually going to ever happen? Like, is it realistic? I don't know. And so ETH is one where I'm just like, do I just roll this over into something else? Do I just move it into cash and wait for opportunities elsewhere? It's been a struggle wanting to continue to hold ETH because I don't really want to sell it and take on the capital gains from it, but I just don't know what the hell else is going to happen here.
I was never a fan of ETH, but I also think that ETH has a better chance of staying the strongest alt asset. You know what I mean? Obviously, its dominance is fairly significant over the entire market. When I look at this, in the time period that we are right now, we're still in a bear market if we look at everything against Bitcoin's dominance, right? We saw the other day the ETH BTC chart just absolutely getting killed, and there's still some room to the downside, in my opinion. I'm not going to make any moves or anything, but you can see that even as the prices have gone up from 2022, you can see that this has just been losing value nonstop, nonstop, nonstop. It's probably going to come down into maybe like somewhere between 0.04 and maybe like 0.35, maybe as low as 0.3. But at that point too, it's like this much has already been lost in value. Is it really worth it to do anything too drastic right now when you're coming to those pairs? I don't necessarily know, but it kind of tells me that there is that type of capitulation that's happening right now when we look at this pair. The USD markets and fiat for crypto right now just absolutely inflate everything and are very confusing to see where there's actually value in some of these assets. But when you look at something like this, it tells you that we're not in the the speculation period from like say 2020 into 2021, maybe close to 2022, like January or so before we started to see that major pullback. Obviously, this is bull market across the board for everything, and this isn't. This is just this long, slow burn of just bear market, and it sucks to watch. But it's also just kind of the truth that we're not paying attention to. I agree with you that Solana also is a lot faster. I'm not the biggest Solana maxi. Obviously, there's things about it I like, but I like speed, but I don't necessarily care too much about it. I hate the Solana bros, to be honest with you. No offense to anyone who's a Solana bro. It's just sometimes I think that things that are backed by VCs are very easy to move the price in. I think Solana is one of them. It's also the one why it's doing so well. Then you look at something like, the one I like, Cardano, just getting its ass kicked, right? So I think that there is that type of battle between ETH and Solana we will see in the future, but I wouldn't count out ETH. I mean, the fact that Gary Gensler didn't do anything against Vitalik and that was pretty much using that as a base case against XRP. I think ETH will be around for a pretty good amount of time. It might get better, but I think obviously some of these alts are better blockchains that just won't have the money or the support behind a lot that something like ETH does, or say like XRP in the future. So little rant there, I guess. But let's talk about one last thing in crypto, which is USDT dominance. Obviously, this is something we're going to keep watching, and this is why I'm really concerned because there is a black swan that could be happening, and it's already happening, possibly in July in the EU. There's a good chance that Kraken has to delist Tether from all of its exchanges to operate in the European Union. That's something that we found out today. And that's really interesting because I've been talking about how Tether there's a good chance that it could get delisted from US exchanges by the end of this year. Now, why is that important when I look at this chart? Well, because USDT dominance, whenever it comes down here, this is literally the height of the market. If we come back down here and we start trading again, then maybe Bitcoin has some room to the upside, obviously. But right now, you're on the 50 moving average. Actually, we're below the 50 moving average today. Let's look at this on the weekly and see how that's performing real quick. Yeah, obviously we're still in this point. We're trying to avoid a death cross at this point, and I think that there's a good chance that we will avoid it. But the thing that scares me is if it does get delisted and there's no off ramp into euros or dollars, then there's a good chance that something like Tether could absolutely just implode in those pairs for Bitcoin USDT and some of these other ones. We start to see a bit of a depeg. So I'm cautious when I look at this and say that we're going to go further to the upside, which means dominance. People are selling into stables. All of crypto starts to come down. I think there's a good chance we get a pretty good rally, maybe closer to like this 7% or so dominance in the market. The question is, if something bad were to happen, say a black swan event, what would that make the entire crypto market look like? Because there's a reason they're going after them. They're delisting them. They froze a ton of Tether addresses today too. What does this look like for the crypto market? I don't know. Do people sell into fiat? Do people hold on to their Bitcoin? They're just like, well, they can't, this can't depeg, right? At least one Bitcoin is equal to one Bitcoin. So it's a very interesting scenario. But there's definitely those rumblings I was telling you about. We are going to see the US go after some of those banks that are in Asia that have been facilitating business with both Russia and Iran, breaking those sanctions. Tether is one of them, and it seems like the EU is also going after them too. Maybe we're looking towards stablecoin regulation coming post that, but I think this is something that people are not kind of preparing for. Seems like people are just very bullish right now too, right? And this is just kind of me just shooting the shit with you. I feel like a lot of people are like very excited to get back in the assets. GameStop obviously was one of them. I'm seeing people with all-time highs in the equity market. They're very excited to get back in. I don't know. I feel like a lot of people are too excited at this point. There's just all those bearish divergences that we talk about. Last thing I'll bring up, and it's kind of important. We talked about it yesterday. It's like, why aren't any banks failing? Well, it's because something like this is happening every few months. So what we're seeing here is about $0.1 billion, $0.1 billion, which is $100 million that is being taken from the Fed emergency repo. This is kind of lender of last resort. It's $100 million. It's nothing if we're looking at like Tether, in terms of how much money that Tether prints. But that does show me that someone is hurting, and we've seen it a couple of times this year already. We saw it back here in March, saw it in April, we saw it once right before May, and then we saw it again on the 16th. So that tells me that there's definitely some pain in the market. They're issuing pretty much a bit of QE that's saving the ass of someone. I don't know if they're trying to hold them up and past today, but it seems like this is becoming a bit more of a recurrence. And if that's the case, then I think that we are going to start seeing a lot more pain in some of the regional banks. And I say the regional banks because that bleeds into everything else that has exposure to it, right? So this is something that we're just going to keep an eye on. The more you see of this, the more pain that there actually is. And I'm not surprised that this has actually been tapped into a few times since the bank term funding program ended, because now people are kind of like, well, where are we going to get some money to survive? Once corporate debt kind of goes away, then people are just kind of stuck with fire sale of assets. The Treasury is withdrawing more than they're depositing. So there's still a lot of money that is currently out there. But the question is, when it gets to a point where people are offloading US debt, like China and Japan, and Americans aren't excited about bonds and treasuries, they're excited about, NVIDIA and all these things that are going to the moon. When do you need money that needs to flow into that treasuries? Probably fairly soon, especially if the banks aren't printing. So I think we're getting to a point that's getting very close where we're going to start seeing some of those banks show major cracks in the system. Maybe it's a month away, maybe it's 3 months, maybe it's close to the election. I don't necessarily know, but it's definitely something that we're going to keep our nose to the ground and just keep seeing if anything else pops up. Not giving any price predictions or any banks that are going to fail. We kind of know which ones are in pain, but that's just something that we're not going to see on CNN or Bloomberg or any of those other shows where people make a lot more money to be wrong about the market.
All right. That is going to wrap it up for this week. Thank you, everybody, for joining us. If you have not yet, hit that like button, subscribe to the channel. We'll be back next Monday to look at the week ahead in the markets as we move closer to the next Fed meeting, to the next set of data. Shouldn't be too crazy next week, at least from an economic data standpoint. We will have earnings. I know NVIDIA is going to report, I believe, next Wednesday. So plenty to look forward to there. In the meantime, have a great weekend. Get out, enjoy the weather, enjoy some time with family and friends, all of that good stuff, because at the end of the day, that's what matters. So have a great weekend. Appreciate you all very much. Stay safe, and we'll see you next time.
Take care. Never say never.